It's so difficult. I look at the stock market and it seems to be oblivious to much of what's going on with trade. Trade's a wide spectrum. Some believe it's just a nuisance and a process that will end in a favorable fashion. Others think the sky is falling. Can you quantify this for us, Professor?
I would put it this way. In the first round, a few tariffs here and there on the proportion of what we have put the number of products, it's a wash. If I don't get my iPhone at the right price, I may buy something else which may not be tariffed, like some kind of a service product. So it washes out. The trouble comes in when you get to the next round, when people postpone their investment expenditures, which then starts affecting the growth and everything.
Now, notional numbers are large, but how much is actually at stake in a realistic dollar figure over a timeline that you've just described?
I would say on paper, when they say 10% tariff on 200 billion, it looks like 20 billion. But if the Chinese drop their currency by 10%, it's a wash. It doesn't even show up in the data then. So it all depends upon what's the effective cost to the consumer at the end. And even that cost in the first round is a little bit trivial to me.
Now, what about, we talk about supply chains. One thing I've noticed about them over the years is that they're really efficient at rearranging themselves in economically positive fashions. Can't adjustments and substitutions also occur with the creativity of trade?
It is possible, but as we say in economics, in the short run, it's difficult. What is that short run? 2 months, 3 months, 3 years? And that's where, when I was talking about the tariffs, I was talking about the tariffs on the finished products coming from countries where the supply chain is not that much in question. If you put it on products, especially on the auto industry stuff with our neighboring countries, then that can have a little bit more friction. But on consumer products, I think it turns out to be a little bit too much hyped up.
I got you. Professor, thank you for your thoughts. It's obviously a daunting issue for investors, but for the moment, they seem to be looking past it.